Greetings, everybody. This is Jeff Scott. This is my weekend review. This will probably be a long one. I'm going to review my first half performance because I'm not sure I'm going to be doing this next weekend. What else? And I think I got some really good things to show you. I think we're at an important part of the market, and I'm just going to show you how I'm looking at it and how I've reacted to it. I titled today, Will Friday's Failure Lead to a Monday Market Meltdown? And I think that this is going to be an interesting Monday. It may all recover by the time Monday starts, and that's something that's happened a lot in the last year or two, where the futures do a lot, and then by the time the market opens, they resolve. But I'm waiting to see. I think it's going to be interesting. Housekeeping. If you are watching on YouTube, and I'm not going to go to YouTube, but if you go to the lower right-hand corner of the screen of the video, you'll see a gear. If you click on that gear, it should pop up various resolutions. I record this in 4K. If you're watching it in the standard YouTube resolution, it will be blurry. If, on the other hand, you'd rather download the video, go to where it says show more, click on that, and you should see a link to my Dropbox video. I do this every week. If there were viruses, other people would have complained. What else would I want to tell you? If you're watching it on YouTube, please hit the up arrow or up thumb. I'd like to get more people watching my videos. I do a lot of work for this. I charge nothing, and I think I have some valuable things to say. Maybe I don't. And then feel free to give me comments. Disclaimer, as always, this is education, not trading advice. I'm a doctor, not a broker. I'm independent. No one pays for me to do anything or say anything about their tools. And everything that I use at some point I paid for. Trading involves risk. You and your owner are solely responsible for any decisions you make. I don't think we'll go into any options positions today, but if I talk about options, the spirits of the options world would like me to tell you that options are risky, and you should be knowledgeable in what you're doing. So when I do my live trading, I call it Be Your Own Guru. I am not a guru. My way of trading is I learned from a lot of people and shaped what works for me. You should do the same thing. Maybe I can be part of it, but you should figure out what works for you. I started by reading How to Make Money in Stocks. When people call me and they ask, what should I do? That's the first thing I tell them. You read that book to give you a fundamental foundation of what the market is like. Then you got to improve upon that. Morales and Catcher were money managers for O'Neill, and they built onto his things with pocket pivots, Bible gap ups. They would suggest that CanSlim may not be the same today as it was in O'Neill's time. They've improved upon it. May he rest in peace. Ian Woodward up here. What a genius. Grew up listening to O'Neill, crafted his own style, helped develop the Hgsi software, and I'm so indebted to what I've learned from him. Ron Brown is his partner in crime. Ron still has a ongoing service through Hgsi. Also lost another great trader in the past year, George Lee, in the lower left-hand corner, my friend from Canada, who I had the opportunity to know and to share the podium with, passed away this year. I'll make a comment about George in my boxes. He's always given me a hard time about the boxes. And I kept saying, George, you need a major low for the boxes to work. Well, we had our major low. Let's see what the boxes did. John Person, I started to know him by seeing him at Traders Expos and listening to some of his education. I bought his indicators, probably one of the first people to buy his lifetime package on TradeStation. Moved to Palm Beach, realized his office was a mile away. We become fast friends. I've recently got him to put his stuff into Hgsi as a paid add-on. I love his green book. Both his books are good. Got a new edition of the yellow book coming. But the green book is probably book number 2 I would read after this. Next book would probably be Van Tharp's Position Size and Money Management, and then maybe go on to the Mark Minervini books. Down here is Cigar. I'm going to talk about Cigar's magic tools for top-down investing and how some of his signals helped make me a lot of money on Friday and also helped me when the market rolled over. I wish I would have paid more attention to him. I own every software program you could think of. I use few. I need TradeStation and Thinkorswim, and I need my real-time indicators. I think it's about time that I acknowledge that I update Genesis every night and never use it. So I'm going to take Genesis off the list. Sorry to that company. From a market analysis, it's a combination of things. It's Hgsi, which I think has got the most robust package for top-down market analysis. It is not a real-time data feed, although you can latch on to Thinkorswim or other data feeds. EdgeRater is a tool that automates a lot of the processes that I use. Spreadsheet-driven, excellent tool. I'm going to go more into detail on Sager's Magic. And then Dr. K is the most recent to my list. His Laguerre RSI adoption, the way he looks at stochastics, his seasonality tools have been now part of my charts and something that I scan with and helps me make money, which is at the end of the day, what else matters? I have no financial relationship here. I just love the program. HighGrowthStock.com. Under free 30-day trial, you can play around at no cost. Don't even ask for your credit card. Under investing strategies, whether you sign in or not, will be hundreds of videos by myself, Ron Brown, and others. Stock patterns are cyclical. I don't care if I'm looking at daily, weekly, monthly, or tick charts. You see the same pattern over and over and over again. You may not see it come down to zero. You may have an uptrend where you have that same package over and over again, the same pattern. Where are we? Man, we've had a major move up. I think by any degree of thinking about it, we are overbought. Are we going to roll over here? Or are we going to have another leg up after a pause to refresh? That's the question. I don't think, if we open up 400 points on Monday, I'll be thrilled because I still have some long positions, but I probably won't make as much money because I really beat my beta down on Friday to reduce my risk. My guess is we're going to have a leg down. It may be a very short leg down, but I'm positioned more towards neutrality because it's time to start worrying about protecting my profits. Speaking of protecting profits, this is one of my favorite Ian slides and Ian stories. Now, most of you on this video or listening to this video are Americans. We played chutes and ladders growing up. Apparently in England, they played snakes and ladders. And if you think about, you're sitting there with your brother, your sister, your friend, sometimes your parents, you roll the dice, you're sitting on one, you get an 8, 1 plus 8 to 9. You end up on 9 and you go, woohoo! Why? Because you get a ladder, it takes you right up to 31. That's, to me, is a hyper bull market. Just had a major move in the market. You roll the dice again. And what happens if you roll a 7? Well, 7 isn't really what I want. Let's say you're up here and you land on 62. What do you think happens when you get to 62? You go back down towards the beginning. All right. This whole game is about getting to 100 and using chutes to get you up quicker and trying to avoid snakes, which cause you to come back down, or chutes in this country. You can't play snakes and ladders or shooting ladders with your capital. In the early days of my trading, boy, I was a world champion chutes and ladders player. I'd be great on the upside, and I would suck on the downside. And I would watch giant profits turn into break-evens and losses. And then I'd have to scramble in November and December and end up with a decent return. Don't play chutes and ladders or snakes and ladders with your account. So, if I believe what I said, I believe that, let me just go back and add to it. Do I think we're higher in 6 months than we are today? Yes, I do. Not sure it'll be the same leadership in 6 months as we have today, but I would bet we're higher 6 months. Do I think we may have a short-term pullback? I think it's very possible, and I want to be prepared for it. Have I made a lot of money this year? You'll tell me in a few slides. So what I want to do is I want to, thinking that way, I don't want to throw out all my longs and go massively short because I think we're still in a bull market. But I think we've got a pause here that hopefully will refresh. We're in the summertime. I'll give you more of my arguments as we go. So on Friday, I took some positions to protect my portfolio. I bought puts on my major positions. I bought some contra ETFs and ETF and options on them, and I took some profits. I'm ready to go all in to either side based upon what the market tells me to do. Right now, I'm pretty neutral. If you look at Friday, Friday was painful. I hate those days when you wake up, the futures are giant up, you're positioned long in the market, it takes off like a rocket. I'm making big bucks. I must have been up $130,000, $140,000 by 9:45 on Friday. Big day. And then many people ended up losing money on Friday. And probably if I didn't act, I would have lost money on Friday as well. But I got to just respond to the happy Father's Day message I just got, and happy Father's Day to everyone listening. So here we are, end of day Friday. Boy, real estate looks horrible. Utilities look horrible. Now, some things don't look so bad. Healthcare looks really strong. We'll come back to that. So clearly a mixed market. If we want to look at the markets and think or swim, remember I warned you early on this might be a long one. And I wouldn't skip through the beginning parts because I did some things here that are different today. So looking at this, what do you see? I see a stock that's in the middle of a trading range. All right. Here's the highs. Here's the lows. Is this a funny head and shoulder? I don't know. Are we failing here and going down? We did, and we tested the 50 and we bounced right away. But are we going back down? We failed at the 17. I don't know. I think this is a concerning looking market, but I'm not saying that the market run is over. I just think the risk is higher. That's the E-mini futures. This looks great, doesn't it? This is the NASDAQ futures. If you want to believe the market's going to infinity and beyond, then you're going to be trading the NASDAQ futures because although this is a potential reversal candle, we set all-time highs here in February as we did on the S&P, but we took out those all-time highs on the NASDAQ. We have not done that on the others. So the NASDAQ, this is a daily chart making sure, NASDAQ futures look pretty darn good here, don't they? Beautiful uptrend off the V bottom. When you see this balloon here, that tells you that's the high of on the chart, and we know that that's the all-time high in this case. If I go back and I look at the S&P futures, you can see it's still back here in February. So that's a big difference between the S&P and the NASDAQ. And we know the NASDAQ giants have been leading this market up. Also a sideways move. Are we failing here? Did we get close to a double top? And do you sell double tops? I think that's got to be a thought right now in the NASDAQ. We're going to look at the cash markets later. Here is the Dow futures. Again, the high back here in February. A failure here. So we had a false breakout above the 200-day moving average and a failure, and we failed at that. That's bearish to me. That tells me we have risk to the downside. The Russell. Again, you have this window here, but we know that the Russell hasn't taken out its 2018 highs at this point. Similar with the Russell, false breakout above the 200, fast failure, run right up here to the 200 and failed. To me, it's coming down and testing the 50. I think that's got to be a concern, not a guarantee. If I had to bet, we're coming down. The VIX is back up above its 50, had a bullish form day on Friday. Is this a flag, and is it going to break out of the flag and go back higher? If I had to bet, I would say yes. I'll let the market tell me, not what my bets are. Then the dollar, which has strengthened of late, but we'll look at it again, except for the big move up and down with the market craziness in February and March. been pretty sideways on this entire sheet. So I look at this, and do I see a rip-roaring bull market that has no risk? No, I see a market that has risk. If I look at the weeklies, you can really see the V-bottoms, and you can see the difference between the Russell, which has barely made it back to the 50 weekly moving average and failed, the Dow futures, which made it back to the 50 and failed, and then the NASDAQ outperforming, and the S&P in between the failures and the NASDAQ. Rates. Rates kind of went sideways this week, but they're off their lows. AD lines, as I looked at this, clearly both the AD line in white and then the specific index, the IWM and the IWB and the large stocks turned up. But then I look at the NYSE, which, yes, that turned up this year, this week, but the index has turned higher. Does that tell me something? Are we potentially getting some divergence in breadth? And does this suggest that the leadership is narrowing? Speaking of narrow leadership, we did see an improvement in stocks above the 200. We know that's a lagging, but the stocks above the 40 did come down some this week. So perhaps short-term some reduction in breadth. And then this is probably the most concerning chart, I think, for this week. And this is the 3-month new high, new low. As we're going up and up and up and up towards this white line, markets are getting extended, extended, and extended. It's not until they break, and when I went back and looked at the data, it's after they break that the market starts to fall. We broke this week. Right? We didn't break until the end of the week. I think that this tells me this market has some more room to fall. When I look at the McClellan, I'm looking as taught by John Person. Extreme readings on oscillator or summation index. That's when you can call reversals. No for that. Divergence of price or oscillator and summation index. Not really. And zero line reject. Nope. If I look at the weekly, same thing. I don't see any of those. Current buckets. This is where we were 2 weeks ago. That is a bullish market. 95% of the stocks are above the midline of their Bollinger Bands, and 45% of the stocks are above their Bollinger Bands. Since 90% of the life of a stock is within their Bollinger Bands, when you see that many stocks above the bands, you know the market's overbought, and the way you resolve that is they pull back and go back inside the bands. Well, here we are on the 19th. We're neutral. More stocks below, so bearish to neutral tint. I think we've gone from overbought and we're on our way to oversold, but we're not there yet. I would not expect a Hindenburg omen signal to fire because we're not at a top, and you need lots of new highs and new lows. We don't have those. From a market perspective, using the traditional way in Edge Rater, using the Woody indicator, everything is green, which is still bullish. We did have the line of kahunas here that occurred a week ago to the downside, but they did not flip the market. We're still in a highly volatile environment. Now the Canaries, all-time highs are at the top of this spinning top, are getting close to all-time highs, but then I got a red candle high this week. So does that mean we're reversing here? I can't say that. Could be. And then what about who's in charge? Well, I think the title's good enough. And if you look at the past week, only 2 of my user groups, and I have lots of user groups, were negative. But let's see what some of the key things. The S&P 500 was up 1.86%. That's a very strong week. Growth, let's look at the IBD 50, was up 6.41%. You better have made money last week. Why am I being bearish? Maybe I should go and change my presentation. The weekend review, On Friday, up 4.34% using the prior Friday's weekend review. Wow. Market Smith 250 up 5.7%. Not 250 stocks here at 116. That's a hell of a return. Then I'm going to find my return somewhere in here, probably in the same range. Probably should have looked at this earlier. 7% on the week. Remember my comment, I had a great week. 7.82 for the stocks that were on my buy watch list. So clearly a super strong week in the market. What about my boxes off the bottom? This is a topic of another day, but the boxes look for, as a way to group the stocks at a market bottom, and Ian taught us to start buying these when they started breaking out. If you look at the entire S&P 1500, it's had a massive move, 38.45% off the bottom. I want you to look at two columns here. I want you to look at the percent change and the percentage gainers had you bought the boxes or some of the stocks in the boxes. I want to be swimming from the field of winners. So when I'm coming off the bottom, I look at my boxes. Now this is weird. Typically box 1, 2, and 7 lead. They're both up significantly over the S&P. Box 4, box 9, box 8. Look at these returns. George, I miss you, buddy. Finally, I got the boxes to work the way they're supposed to work. Growth is back. This is an Edge Rater report. So what I do is I basically take a snapshot of the entire market every weekend. And then on Sunday, I can go back and say, let's look at last week's snapshot and let's see how the return was based upon variables. Now, there's a very close correlation between what we do in the land of HGSI and what's done by O'Neillians and Canslimers and Investors Business Daily and Market Smith, etc. EPS rank, relative strength rank, and group rank are the three ranking tools we might use when we look at a stock. The EPS rank is how it is its earnings compared to its peers. Relative strength rank looks at how is it performed compared to its peers. And group rank, how is the group performed? If you give each one a score of 0 or 1 to 99, the most you can have is 297. So I always ask the question, did higher ERG lead to higher returns in the last week? So now let's look at this chart. First thing is, I always cut off the last dot on both sides. Why? Because there are very few stocks in the light gray in those buckets. And then I recognize that this isn't science, so I'm just going to try. Can I fit a line here? Yeah, I can. I can clearly make a line from 0% to 30% and say, man, as you had higher ERG, you had a higher return this week. Growth wins, baby. If I look at EPS rank from low to high and look at the return, the higher earnings per share ranked stocks, well, that's the way it's supposed to work, have better returns. Relative strength versus gain. Finally, the crap off the bottom underperformed. Higher relative strength stocks had big returns. Group ranks. Higher group rank stocks outperformed. Accumulating stocks outperformed. So this is normal. This is the way life is supposed to be. Probably a one-week wonder. I'm a growth guy. You know I love this week. All right, let me talk about Sager's magic tools. I love these tools. I'm very fond of Sager too. I don't need to go deep into history, but I basically bought his tools for Metastock and TradeStation, and then I bought these when they came out. At the time, he still does, he lives in Thailand, and I think his bank was in Singapore. And getting a U.S. bank to wire money to Singapore or Thailand is a challenge, because at the time he didn't take credit cards. He does now. It was pretty funny actually trying to get the thing paid for. The problem with doing this on Father's Day, I'm going to get constant pings, but I guess that's good. people remember. So I am so fond of his tools, and got to know Sager online and watching his videos. And then when Sherry and I went last year or a year before, I can't remember how long, it's in the pre-COVID world, we went to Vietnam and Thailand, and we got to meet him and have dinner with him. So top down, you start with the market. I'm all about the market. You'll see that in the next few minutes anyways. Then you look at sectors and industry groups, and then you look at stocks. So the first thing is, this is on my machine, real time, every day, 24/7, 365. Because it tells me at a given point what sectors are working or not working. It tells me that one day performance, only one was positive. The only sector up this week on Friday was healthcare. I showed you the red earlier. It shows me on 2 days, the only one up was healthcare. And over 5 days, we did a little bit better with several sectors up, 7-4. We know that when the market was closing on Friday, this is the only slice of positive sectors. This was the slice of positive industry groups, and then this is the AD line on the day. So industry group AD line and the stock AD line. So this is a slice of industry, this is a slice of stocks. I may have messed that up before. That just shows you how weak the market was. Down here it tells me 5, 10, and 1 month performance. So that gives me a sense of the market. Now I may want to break out by industry groups, so I can use a ranking module. What's the leader on the day? Or I could look at a percent return. These are end of day data. You can see that healthcare really was the strength over the last week. You can get a sense over time, going back a year, of the fluctuations in and out. Discretionary had a big win 3, 2, and 1 month ago during the heart of COVID, and now it's weakened considerably. Healthcare and consumer staples suffered for a couple of months, and now they're on fire. I could then highlight healthcare, click on those gears, and I pop up the various industry groups within healthcare. And I could see that biotech comes to the top. And again, biotech stubbed its toes, but biotech's been on fire, technology, distributors. Okay. Now, let me go back. So I isolated from biotech to life science tools. And then I clicked peers, which are the people, the family, and all the stocks that were in that family came up with a lot of fundamental analysis. And then if you click on the stars here, you can bring up the stronger stocks, and that gave me a relatively short list of the strongest stocks, real time, in the strongest industry groups, in the strongest sector. Top-down analysis. Now, you got to have a charting platform, and I like HGSI, and this does not replace HGSI. But I love this tool, and again, if you came in right now, you'd see it on my other machine. Will bad news slay the bull? Has the stock market valuation outpaced the economy? I would say yes, but the market discounts and is looking forward. Can the Fed continue to expand its budget and lending facilities until we have a vaccine? That might be a yes. Does a substantial rise in COVID cases foretell a second leg down? Did you see what happens every time there's a news report about more cases today versus yesterday, or Apple shutting some stores? Has the market overestimated the pace of the recovery? Are we already seeing cracks in the recovery with weakness in casinos, cruise ships, airlines, and hotels? Boy, these things were leading. Remember that junk off the bottom? They weren't so strong this week. Then we have the civil unrest. Does this spill over to Wall Street, Main Street, and Pennsylvania Avenue? And if Trump's reelection risk grows, do we lose the Trump put? I think that markets like to climb a wall of worry, but sometimes Humpty Dumpty falls off the wall. And we may be in a Humpty Dumpty market. So I do this with pain. I feel that if I'm showing you how I trade and what I do, and I'm making not suggestions because it's not trading advice, but showing you how I use the tools, that I better put my money where my mouth is and show you my performance. When I show this, sometimes I get comments about why am I doing that? And when I don't show it, people think I must have had a bad month or two because I'm not showing it. So I like to show it quarterly. I'm not sure I'm going to do it this program next weekend, depending on family events. So I thought I'd give you my mid-year review today. You've got to take a few things with a grain of salt. I've been very successful, not just trading, but in my business career. Therefore, I can take more risk than many of the people listening to this video. I segregate my money into various accounts, and the money I trade with is money that I'm willing to lose. And when you trade, you need to be willing to lose, or else you'll never win, and you'll get stopped out and get frustrated and walk away. I have been educated in this for 25 plus years. I have spent countless dollars on software, advisory services, newsletters, live education, online education, and a lot of it's been crap. But I think I learn a little bit from everything that I do. I'm not done learning, and I'm not saying what I do is the right way to do it. It's just the right way for me. This year has been a dichotomy for my portfolio. I am up a lot, but I've seen more volatility in my equity curve than I'm used to, with my portfolio actually turning negative in mid-March. Not a lot negative, and certainly not like the market did. I was like a deer in headlights. And if you look at those long red bars at the start of the market fall, I didn't react fast enough. But when I reacted successfully, and before the market even started getting close to recovered, I was back positive on the year. My trading account is my lifestyle account. I have a goal to return $500,000 each year, meaning to make that, to sustain my addiction to buying things. I think some people probably think I'm obnoxious, but some people, I think, like to see what I do. And I buy a lot of shit. I have a larger retirement portfolio and still have a generous income from my day job. My goal is not to touch my retirement funds and to have my salary pay for everything that I do in my life and to avoid getting any debt. So I started the year with a lot of money in the account, but I had to pay about $250,000 in estimated taxes for 2019. I had to pay a similar amount to fund my annuity. And so if I take that out of the initial account, I started with $1.4 million. As of Friday, I'm up, you can see the number, $875,635 or 62.5% in this account. Now, that's a big number. Let's just talk about numbers. It's real dollars, okay? It is real dollars, and I will show you proof of that on the next slide. I am not trading crazy volumes in one stock to get a big number to impress you so you buy something. I don't know the best way to tell you my performance. I know that John Person, for his newsletter readers, he puts out a spreadsheet that shows every trade he takes and his percentage return. And he basically adds up the percentage of returns, or it sequentially. So if you have 100, 100, 100, that you're up 300. Then if you have a 200 down, now you're up 100. And that's his way of doing it. It probably makes sense because he does a lot of option trades. I know Dan Fitzpatrick, who only does stock trades in his model account, shows you his percentage return, his average drawdown. And I guess that's probably clean because then you don't have to show any real money. I think the only thing that makes sense to me and the easiest for me is just to show you real dollars. Why? Because in Thinkorswim, all I got to do is go to this thing on the bottom, overall P&L year to date, green, 875, 635. Now actually this 9 here, that's bull. This is some of the stuff that happens over the weekend. I got puts on my Amazon, so I'll be down 2 instead of 5. I got 100% put coverage on the Bank of America. It'll be down 0. So that number is not even real. So the actual number is a few pennies higher. That's the number that I put in the bank. That's the number that buys me my next house, car, boat, whatever I'm going to buy. Good thing my wife doesn't want any more diamonds. That's the number that matters to me. Now, here's something that's hard to believe. I've done this at the same time as I've deployed multiple protection strategies, puts, contra ETFs, etc., to buffer downturns. I take the trades I present on the video. I'm not playing chutes and ladders at this point in my life. The minute I get nervous in the market, I call it my beta, the correlation to the S&P, and I almost want to get my beta so that my dollars don't move. If I'm at risk, I can set my portfolio up so it looks like I went to cash without selling anything. It's buying protection so that every dollar up or every dollar down is balanced. And I do that because I can sit out a time of lack of knowing, and all I'm paying for is a little bit of premium. And if I play my cards right, I can make money on the back end on that. I've done that this weekend. And I actually went higher from 9:45 until 4 p.m. on Friday. I am not a professional trader. I have a day job as an executive in a healthcare technology startup. If you want to see what I do, go to www.integraconnect.com. I do not day trade, and I don't stare at my screens all day. And yes, I have a lot of positions. However, if I have a position where I've already taken profits and I've raised my up and outs on my options, so I'm now playing with a small percentage, I may let things run a long time. And so I accumulate a lot of positions which really don't, to me, have portfolio risk because I've already taken off profits and more than broke even on them. There's also some puts and some contras in there, so that's why the number is so big. Know your news and earnings. Here's the numbers for Monday. And as I look at what's important this week, home sales might be interesting because it looks like home builders weakened as the market went on. So you got existing and new home sales and home price index year over year. Thursday's jobless claims, how many millions of people are still have new claims, continuous claims. This will probably be market moving. Revised GDP on Q1, who cares? That's pre-COVID. And then Friday, we've got some spending and income inflation numbers. I think the sentiment might be interesting, but it's a revision. Actually, this is marketwatch.com, not Bloomberg today. And then I have to know the earnings, and you can see it's a relatively light week for earnings. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So what are my thoughts? The S&P declined 0.6 on quadruple riching Friday as renewed concerns about a recovery in the coronavirus tempered the market's early enthusiasm. Market rolled over at 9:45. I'll show you. The Dow Jones average lost 0.8%. The Russell lost 0.6%. The NASDAQ was up a teeny bit. The S&P advanced 1.9 on the week, recouping some losses from the prior week. The NASDAQ outperformed 3.7 up. The Russell 2.2, and the Dow is up 1. I take my returns in the context of the NASDAQ being the only thing up on the year, 10.9. The Russell's down 15. S&P's down 4. And the Dow Jones Industrial's down 9. I had my best week of the year. Interestingly, to the long side, and then on Friday to the short side. I already mentioned what I did. So before I go to the charts, let me show you what I was seeing in the market and why I am a little bit nervous about Monday. Here we are in February 2020. Let me just set the story here. This is TradeStation. The indicators I use here are not free. I paid for them. The first column is the ES futures. The second column is the NASDAQ futures. The third column is the Dow futures. And the fourth column is the Russell futures. Notice, essentially, they all look the same. This is the top in February. This is a daily chart of the futures. 5 things happened that I followed. Number 1, multiple bearish stretch and headwind signals. That are things you see in a topping or potentially topping area. Now you can see them here where there wasn't a top, and then you had the pluses come in here and the market rolled over. You see them here on the NASDAQ. You see them all over on the Dow, and you see them, I'd have to go further to the left, but you can see one right there on the Russell. Second thing, false breakouts at the boundary or failure. The boundary is a band from Sager. It marched along the band here but failed to break. It had a false breakout here and came right back down above the band. It had some small false breakouts and came down. Small false breakouts and came down. Number three, we went from greens to a yellow traffic light signal. So we're changing, the traffic light might be changing. So a warning sign at the top on all of them. Number 4, we had person sell signals come in. Now they come in and go, they come in and go. So it's a constellation of things. And then number 5, I had a Roy Kelly Trend Pro major market cycle top fire. And that's the one with the red line in it, fired on all of them at the same time. Okay. That's what happened in February. 9:45 on Friday. We got number 1, we got the headwinds and stretches on all indexes. Number 2, we started getting some yellow candles. Number 3, we failed at the boundaries. Number 4, we got person sell signals coming in everywhere. Forget the fact I got trend line failures too. Number 5, at least on the NASDAQ, we had a major cycle top. I went very short at that point, short as I've been in my portfolio, to the point of buying 400 contracts short on TQQQ and short on SPY, meaning buying puts. I covered a lot of them at the end of the day. It was a beautiful day on Friday. And you could see how the market came down. Now, I started covering on this move here. And I go, oh no, that was short-lived. Notice we had the bullish stretches and headwinds. Here we go. The opposite's occurring here. We had yellow traffic light signals at the bottom, but we ran right into trend line resistance. These are automatic generated trend lines. They were sitting on the charts. All right. So what did I do? I went short again. What would be the reason why I'm wrong and why at the end of the day I lightened up some? Here's the daily charts. We've run up on the Dow, the E-minis, the Dow, and the Russell futures. We've run into trend lines that are going down. We had traffic lights. We had stretches and headwinds. And we had person bearish reversals. This is the recent market top. We came down to a trend line across the board, and then we bounced. We are in a trading range here. Here is a potential wedge. Here is a clear or triangle formation. Clear triangle formation. I'm afraid to load the boat one way or the other after hours because we could break above or we can break below. If we break below the support, we'll clearly test the band down here. So I think the market's ready to do something. And my guess is the market's going lower. But it looks a lot worse on the short-term chart than on the long-term chart. All right. So I guess the benefit of COVID is I was sitting at home to see that, because normally during the day, I never would have seen that. So now I'm going to move away from short-term thinking and move a little bit more long-term. Just look at where the major market indexes are. Remember, there's 5 or 6 points I'm going to look at here. E-mini futures. Number one, they are in a person sell signal. Number two, we've worked off the MACD divergence. Number three, we're in the center of our trend line. If I go back here, we're in a bi-weekly and a bi-monthly. So short-term weakness, longer-term strength. High jumps at 77. My weekly bond goes green. This would be a reason to be neutral and not really bearish. Neutral, slightly bearish on this one. Again, this is longer term than we were just looking at. Let's look at the Dow futures. Same exact story, 74%. Remember my high jump friend? 100%. What did the market do? Of course, it fell. You get to 100, it rolls. We're nowhere close. The NASDAQ, which has been the strongest, is actually in a buy signal. This is buy on all three time frames. You look at this, it's still not at the high jump. So if you want to be bullish, when I look at my longer term charts, I can be bullish. And I can look at the Russell here, also interestingly in a short-term buy signal. So I think it's a tough market here. I think you've got short-term signals that this market could go down further. You're clearly in a decision point area with triangles forming. But I don't see anything that says unload. So what do I do when the market's confused? I look at beta. My beta of my portfolio is 1. If the S&P goes up 10%, I go up 10%. If the S&P goes down 10%, I go down 10%. If I can get my beta down to, say, 0.2, if the S&P goes up 10%, I'll go up 2%. If the S&P goes down 10%, I'll go down 0.2%. I lower my beta on my portfolio when I'm confused. And right now I'm a little bit confused because I think the market can go either way. My guess is it's going to go lower, but we shall see. Let's go into HGSI. There were actually quite a lot of good-looking stocks this week. So, as I said, this is going to be a long one. Let's go into major market analysis groups. I'm going to pause it here for 1 second. All right, we're at 47 minutes, so probably about 20 more minutes till I'm done, 25 more minutes. So let's look at the major markets in HGSI. Let's do the top-down review. This will bring the things that had the best performance up to the top. And I know that my portfolio did good when I see Biotech at the top. So let's just show you what this week looked like. And again, try and make sense of where we're going. And I've gone out of the futures. I've gone out of the longer term charts. And I'm now into longer time frames. Here's the S&P 500. I guess a safe way to look at this market, we're in this box. We are right in the center of that box. If we break above this PSAR dot, my next goal is the top of the box. And if I get a breakout above the box, wow, this market could go crazy from here. On the other hand, we got a bearish candle. We're breaking below the 50 and the 8-day. I think we go down and test the bottom of the box. And if we break the bottom, do we retest here? Every time I start hearing people talking about the markets and it's different this time, the minute I hear it's different this time, and it's different this time because the Fed is liquidity, it's different because the government keeps giving stimulus, it's different this time. It's never different this time. So I think that I have to play the market both ways. I see this as a more bearish pattern. I think we're going to the bottom of the box. Then we see whether we jump or we break down. Right now, we're in a box. We're going sideways. That's the S&P 500. If I look at the Dow Jones Industrial Average, that's a failure of the 200-day moving average. All right, I could do the same thing, and say, here's my box, right in the middle. I'm failing in that box. Looks like I'm going to probably do this. And then do I do this or do I break through? I think that's the downside. Upside is I come to the top of the box, I either break back down or I break out. No one knows. We're in the box. That is clearly, to me, a bearish looking picture. If I go and I look at the NASDAQ, this will be a happier picture. We're at the top of our range. Now, are we having a double top here? I don't know. I think it's possible. But I just got to play what I see. And what I see is, and I'm a horrible drawer, by the way, so don't. The only reason these lines are straight is because the program does it for you. We're in a beautiful ascending pattern here in a trend. And we're in the middle of that trend. And again, I still think we could go down. We could go down here, touch the bottom of that trend line, and we're in very good shape still. So this is more optimistic. And what do you see over here? I see a very big bullish engulfing pattern on the NASDAQ. That's bullish. NASDAQ looks totally different than the rest of the market right here. If I look at the Russell, we're kind of in the land of the boxes. And these are not Ian's boxes. These are technical boxes. And we are right in the middle of that box. So I think the market, except for the NASDAQ, all look like they're in areas where they could roll over. And look at this. We failed here at that 200-day moving average. It certainly would not surprise me to come down and test the 50, which is at the lower boundary of the box. If we look at the dollar's up a little bit over the last couple of days. No surprise. If we look at the VIX, it has bounced a little bit as well. If I look at gold, gold is at an interesting position. Gold looks like it's ready to take off. Mobile breakout from a squeeze, a pocket pivot, and a kahuna. Gold looks strong. Interestingly, silver miners probably look better than gold miners. They both looked interesting. And silver doesn't look as exciting here, but when you see the miners, you'll see what I mean. Now, gold miners seem to be lagging once again gold. And they're sitting down, but also in a position that I'd expect potential of reversal, especially the market is weak. Don't you think that gold might do okay? All right. What else? A couple other things. I mentioned if I see Biotech at the top, I know I'm happy with my portfolio. So here's the NASDAQ Biotech, the IBB. Breakout. Mobile breakout from a squeeze. Kahuna. New John Person buy signal. Weekly and daily bongos are in a buy. Under accumulation. Best looking thing I've shown you all day. Let's look at semiconductors. A little bit more tired. Now, again, maybe I'm drawing too much today. But, this is kind of like the markets. We got this thing here. And typically, what do these wedges triangles do, is they typically break out in the direction that they were entered. They're on an uptrend. But right now, what do you expect? I expect sort of a trading range, a narrowing trading range before a breakout. Okay. What else? Let's look at the IBD 50. So this would be an actively managed ETF that's buying IBD 50 stocks and rotating them in and out. And clearly, this looks a lot like the NASDAQ in a very healthy uptrend, closing up quite a bit on Friday, almost 1% in a down market. Certainly been strong. The IBD breakouts were actually leading, and they've got kind of a little bit looser up here and less obvious to me. So that gives me a sense of the market. And again, when I look at the short term, I'm nervous, but on a long-term basis, I still think the market ultimately will go higher. All right. Now, next thing I usually do is I go into industry groups. I hit 7, hit the warehouse, and you can see I got 175. So how many of these have momentum to the upside? 38. Not too bad. How many to the downside? 23. So that's kind of neutral. And to the downside, IT, midstream, application software, boy, they've been a big winner for me. Internet-based services, payment and data processors, a lot of technology names have short-term weakness. 5-day up, 40, 5-day down, 62. So short-term, the market's a little stronger than the long-term, but it's weakened compared to last week. So publishing and broadcasting. So I highlight with the left click of the mouse. I right-click, open up a window, change the index group, and as you could see, hold on, lots of Happy Father's Day wishes. Oh my God. All right, back on my game here. The only one publishing group was positive. I only look at those, positive and above the average, and that's Urban One. I don't know anything about this. I don't chase these things unless I have a lot of knowledge. I'd rather wait till the stock comes down here and consolidates. This is, to me, is a very tough pattern to follow. And look at the volume without even looking, 25 million shares on something that averaged 3 million. And if we go back here, it's got 1,000 shares, 1,400 shares, 1,000. So what happened to this company? It's news driven. I don't know enough about it. I don't chase. Back, right click, left click on back. Next one down is Biotech. Lots to love here. Regeneron looks like the monster of the midway. This thing is on fire. What a beautiful uptrend. A little bit of a pullback. Mobile breakout from a squeeze. Pocket pivot kahuna. New person buy signal. I hope George Roberts stayed long when he asked me about it back here when it was about $400, $500, $480, I think. What a beautiful move there. Novavax. Thoughts on vaccine companies. The bullish comment is the way we get out of COVID and beyond it is we get a vaccine. Whether it's Moderna, Novavax, or Big Pharma, God only knows who's going to win. But here's what I do know. Whoever wins is going to get a pat on the back, the Nobel Prize, thanks of a grateful universe or earth, and no money. They're not going to be able to be profitable on this. This is going to be a societal present. So chasing these companies that have very little opportunities to be profitable, to make a lot of money on this, isn't that exciting. I made money on them early on Novavax. I got shaken out back here on this day too early. Then you had the government pick 5 or 6 to invest in. They weren't one of them. And of course, they go on to new highs. I think these are risky plays here because I don't think they're takeover candidates and I don't think there's a big profit opportunity. Gilead, talk about lack of profit growth. Run up, sideways move, mobile breakout from a squeeze, a new person buy signal, and pocket pivot and a kahuna. It's a buy. I can't believe I'm saying it. It's a buy. I look at the earnings per share growth. There are none. They need to make an acquisition. Revenue steady. Great company. Great products. Single-handedly cured HIV. Not cured HIV, but took HIV from a quick killer to a chronic disease. Cured hepatitis C. Great company. Not been a great stock for a long time, except for this move here. It looks like it's potentially ready to break out. Vertex, uptrend, sideways, breakout. Biomarin, we've been talking about this one for several weeks. This was the day to buy. 2 kahunas in a row, mobile breakout from a squeeze. We're a little late here, but it continues to go higher. Amgen, stodgy old name, breaking out. Biogen, no thank you. Insight, what a beautiful move. sideways move and a breakout. Moderna, another one of the vaccine plays. I don't think this one is sold off as well. Same story. Will they ever be profitable? I don't know. Aniline, breaking out. This is an amazingly strong group. Seattle Genetics. I'd rather be buying this pattern lower here. Sideways move and a breakout. Like the pattern, like the company. Used to be one product, now it's got three. I own some Immunomedics. It broke out on Friday. Celldex has been around a long time. This is one of these speculative looking patterns. What kind of volume is coming in? 7 million on something trades 3. Maybe there's something to it. It started going up after ASCO. They make immunotherapies for cancer and other diseases. They probably have some vaccines. And antibody therapies which could treat COVID. There's a lot to like here. I'm smart. Here's what I do. LABU. Looks like some of the better stocks that are not way too far. I buy the ETF. Yes, I have a position in Immunomedics. Why? Because they were a rare oncology company that I did not work with, so I didn't have a non-disclosure agreement that prevents me from buying stocks. And I knew they had a PDUFA date, and I knew they had a high chance of getting approved based upon their story. Okay? I own Macrogenics. I was wrong until Friday. Had a big move up. This alerted me. I looked up what's going on with them, got very excited. Their ASCO stuff looked And then what happened on Friday? Popped. The beauty was I had $20 calls that were, nope, I had $25 calls that were set to expire on Friday. There were 26 or so, up $1 in the money on Thursday, and that was a up move over the last couple of days. Then they broke out and became very profitable on Friday. But for me, the easiest thing to own is LABU. When I think biotech is strong, I think biotech is strong. Precious metal mining. Remember I talked about silver stocks? Let's look at a couple of things here. Here's Newmont Mining. So the gold stocks look like this. They pull back, the gold miners. They look like they're getting ready. Their weekly charts look like they're already bouncing. I have no problem buying Newmont here. But look at Wheaton, Silver Wheaton. Get ready to break out if it takes out its chandelier stop. Look at Goldfields, another small gold stock, broke out on Friday. Mobile breakout from a squeeze, a kahuna, positive person indicator. Let's look at Barracks, the one I've been owning, kind of going sideways down here. And then if there's any other silver stocks here, I could show you SSRI. Looks like it's ready to run here. We'll see some more silver in a while. I'm not going to go down all 10. Let me look at some of my favorites. Look at e-commerce. You know, part of my performance this year is Amazon. But the reality is I've had a lot of protection strategies on it. So I've made money on Amazon this year, but not as much as I would have if I just pinched my nose and closed my eyes. The problem is I can't sleep then. I like to have my Amazon protected. And I do, although the protection's pretty loose right now. Amazon looks incredibly strong. Its earnings are not until July 23rd, so it may run further. This one's gone too far, PDD. Hgsi breaking out here like that. It even makes money. Look at the earnings per share growth on this puppy. Chegg, I'm in this. Beautiful pullback. 3 kahunas in 5 days. There's something happening here. And that's the reason why you go long, and it broke out on Friday. Netflix. You know, Netflix is one of these stocks that's in a box. And my thoughts on Netflix is I'd rather buy it in the bottom of the box than in the top of the box. But it wouldn't shock me to see Netflix break out of the box here, and I'd probably buy it at that point. Anything else here to show you? Nah. So that's a top-down review, is when I start going through all the different industry groups. In the essence of time, I'm going to stop today on that. And let's go look at my buy watch list and see if there's any stocks that I want to point out to you. Now, again, I think my performance speaks for itself, and I don't need to justify what I do. But you're probably looking at 52 stocks, and you're saying to yourself, how the FUCK are you going to follow 52 potential stocks? Easy, he says. First thing I'm going to do is I'm going to go into my Thinkorswim. I'm going to go into my Market Watch, into my Buy Watch, and I'm going to import been having problems with this feature, so it's hopefully won't mess me up. Import. Yeah, for whatever reason, that thing does not go away. Leave it down here. But I bring those stocks in here, and then I have certain signals I'm looking for. I'm looking for my market thing, which is a momentum indicator. You can see how many of them are positive. 1. I look at my pseudo vantage point moving average crossover system. I look at who's got kahunas, HCDs, LCDs, pocket pivots, Bible gap ups. I look at Laguerre RSIs, and I look at seasonality. So I can be looking at this. I don't need to look at the charts. I know exactly what's going on. Therefore, I can manage a relatively large position. In TradeStation, I do the same thing. It's called Radar Screen. Here's an example. I have 2 different ones. We get to Dr. K. I've got stocks I own, my buy watch list, and I'm looking for his Laguerre RSI, his stochastics. I'm looking for seasonality. So, for example, here is a stock. Let me see if I can get it. Let's look at Laguerre RSI. Halozyme. This is a stock, let me pull this down, that I'm interested in now. For a long time, I sort of was not, but I think something's changed. They got another drug approved. Big move up. This is a Laguerre RSI buy signal. Down here, I know it had a pocket pivot, a mobile breakout from a squeeze. Its PSAR turned green, and it had a positive force and positive kahuna. I also know that from a seasonality perspective, if I look at 30, 60, and 90 days, I believe, let's check this, it's format, edit all studies. Sometimes I can't remember what I said. Come on, come on, come on, come on, come on, come on. Oh, all right, that was a mistake. Come on. I have a lot of things running. But it tells me over those period of time seasonality. So I see in the next either 45 or 60 days, it's going to go up 13%. I didn't want to cut. That's not what I wanted. Let me try this again. Studies, edit. Yeah, that's what I was looking for. Except I did it on the wrong one. Let me try this again. All right, it's not doing what I want it to do, but there's a way to go in and see exactly how this is set up. And I'm getting tired, and I'm not doing a good job of finding it. Edit study. All right, so it's set up to look at 1 month, I have to go back and look at that because that looks like 200 days. That's too much. All right, I got to go play with that. I think I've got my settings messed up. But anyways, back to the story. I like the chart. It's got a new Laguerre RSI. It's got positive seasonality. As you can see here, it's going up. I might go into HGSI. And it's Halo, H-A-L-O. And what do I see? I see a stock that went sideways, pulled into the 50, has a mobile breakout from a squeeze, a new John Person indicator, a pocket pivot and a kahuna, and a nice looking weekly chart. I think Halo is a buy. Now I'd probably set my buy price somewhere between the close and the high of the day and let it trade into my trade. Look at the earnings per share growth. This is why I changed my opinion on the stock. It's going to take off. I like Halozyme here. Let's go back up into the buy list. And let's click on industry groups. Lots of biotechs, okay? I showed you one of my favorites there already. All right, then I have e-commerce discretionary. I showed you Amazon, Chegg. A couple weeks ago I talked about Chewy. Look beautiful here. It looks like a good time to add on to my position. Then I have my favorite stock of recent days. Where is it? I know it's in here. This is the Gambler's Stock of the Year. You can do a 50 wide call spread with the long call at the money and then a 50 point wide for about $15 on this stock with 1 week durations. And I've done it probably 8 weeks in a row, and probably 6 of them I've made max money on. This stock is freaking crazy. Shopify. I first bought it back here. I don't really want to go back there, but it had the low jump and it had multiple buy signals come in. My neighbor Kathy had been in it for a long time. I kept looking at the fundamentals and saying, why? And then it did this pullback, gave me the signal, and I went long. It tanked. Actually, that wasn't when I did it. I did it. My first buy was probably here. I'm trying to figure out where my first buy was. It was last year when it pulled down. Yeah, it was in this area. It had a great move. It died with the market, bounced around a little bit. I lost some money in here. And then ever since this move here, look what it's done. Huge. It's gambling at this point. So this looking back again at my buy list, I'm getting tired. I know you're probably getting tired. I mentioned silver. Let me show you a couple silver things, or a silver thing. I showed you Wheaton. I showed you, I don't know if I showed you SSRM. I think I showed you this one. Looks like it's setting up. Here's a stock I already own. I have a small, I think I got 1,000 shares left of this. I have this one crazy account that I don't even show you, which is sort of my buy and forget account, where I try and buy things before they break out, and then I sell everything but 1,000 shares. So I'm playing with the bank's money, and then I forget about it. So most of the positions are up like, I don't even want to tell you how much they're up. They're up a lot, and they certainly support why it's good sometimes to be long-term. Axosome, I bought at $8 a share. All right, in early 19. It ran up to 110 or so, and that's when I took most of my profits up on this double top. And I've been sitting on some because I think it's going to go much higher. It's at a good buy point. 2 kahunas in a row, a pocket pivot, person buy signal, mobile breakout from a squeeze sitting on the 50. I would give it a few bucks underneath the prior day's close. I think that axisome looks good here as well. Enough of my mouth and talking, and I didn't show you my numbers for any other reason but to justify why you listen to me and to show you that I don't know everything, but sometimes I may know a little bit about stock picking, and that's to me what this market's all about. It also starts with the market, which is why I show you things like the chutes and ladders. I guess I'll leave you with another one of my favorite charts of the week, but this is a dangerous stock. They make diagnostic tests, think COVID. Clearly, it's in an uptrend. If there was a way for this stock to lose, just to be like in this channel here, what a great stock that would be. The problem is this crap. And therefore, it's hard to have a lot of confidence. There's probably a lot of people that bought up here that are waiting to sell. But it's bounced off the lower trend line. It's got John Person's indicator behind it, mobile breakout from a squeeze, pocket pivot and kahuna, and that looks interesting as well. On that note, I'm tired. You're tired of listening to me. To the fathers out there, happy, 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 happy Father's Day. To those of you that have fathers, hopefully, unlike mine, they're still living, call them up and tell them you love them. Have a great day. Probably won't be on for next week. See you in a couple weeks. Bye, everybody.